Welcome back to Mindful Money Nuggets. Today we're diving into the core of financial literacy, the essential terms, strategies, and calculations that every savvy money manager needs to know. Think of this as a crash course in building a strong financial foundation, one mindful step at a time. You know, a lot of the common questions I get from clients boils down to having a solid understanding of a few personal financial terms. From cash flow to credit scores, understanding these basics can feel like trying to learn a new language, but it's a language that can change your life. Today, we're going to break down these concepts in a practical, straightforward way, very straightforward. Whether you're just starting out or brushing up on your financial vocabulary, these are some terms that are building blocks of a strong, mindful financial foundation. And they're definitely terms you will hear thrown around in the financial world. So here are a few foundational terms. I want to start with number one, which is cash flow management. Cash flow is the movement of money in and out of your hands. Think of it as a financial heartbeat of your life. It's the key to maintaining day-to-day stability. Effective cash flow management isn't about squeezing every dollar. It's about creating a system to keep what's coming in and going out in alignment with your needs and goals. Number two is a statement of financial position, or sometimes called net worth statement. This is a snapshot of your current financial health. Imagine listing everything you own of value. Those are your assets. And then listing everything you owe, your liabilities. Subtract liabilities from assets and you've got your net worth. It's a powerful way to know where you stand right now. Number three, assets and liabilities. I want to break these down just a little bit further. So assets are everything you own that has value. That's cash, real estate, investments, even high-value personal items. Liabilities, on the other hand, are the debts you owe. Knowing the value of your assets and the liabilities helps you make informed financial choices as you go. Now, we move into some specific documents and common reports that you'll hear about. Number four is a cash flow statement. A cash flow statement is a bit like a financial journal. It records all sources of income and expenses over a certain time period. This statement allows you to spot trends, overspending, or opportunities to reallocate funds to areas that matter most. Number five is an income expense report. On a more granular level, an income expense report breaks down all your earnings against each specific expense. It's a way to really see where your money is going so you can make mindful adjustments. Here are mathematical equations and common recommended saving strategies that you'll likely hear about. So number 6 on my list is debt to income ratio. Here's a term that you might hear a lot. Debt to income ratio. This ratio tells you how much of your income is going towards your debt payments. Financial experts recommend keeping this ratio under 36% to maintain flexibility and prevent debt from running your life. Number 7, something I talk about a lot, is an emergency fund. An emergency fund is a dedicated savings location. It can be an account or just a category in your budget that is meant for unexpected expenses like medical bills, car repairs, or job loss. Experts often recommend setting aside 3 to 6 months worth of expenses to provide a cushion in uncertain times. Number 8 is saving strategies. So whether it's for emergencies, a big purchase, or retirement, having a savings strategy is crucial. I recommend automating your savings to make sure it happens consistently and setting realistic goals that align with your priorities. Remember, small, consistent contributions can make a big difference over time. Optimizing your financial plan will likely include tax management and insurance. So let me break these down. So number 9 on my list is tax management. Tax management doesn't have to be scary. It's simply about taking advantage of deductions, credits, and tax advantage accounts like IRAs or 401ks. Learning a few basics here can help you save more of what you earn. Insurance is your safety net. It protects what you can't afford to lose. Life insurance, health insurance, even renter's insurance or homeowner's insurance. We all know about car insurance. The goal is to assess risk and get coverage that aligns with your lifestyle and family needs without overpaying for what you don't need. If you are jumping into investments, here are a few basic investing terms. Passive versus active investments. Investing can sound complex, but at its core, it's about growing your wealth. Passive investments, like index funds, take a more hands-off approach, while active investments, like stock trading, require far more time and research. The best approach is the one that fits your lifestyle and risk tolerance. Number 12 is future value evaluations. So future value is essentially what your money will grow to in the future, considering a certain interest rate and time period. For example, if you invest $1,000 today with an expected 5% return, what will that look like in 10 or 20 years? This concept is a key concept in retirement planning. Number 13, actuarial assumptions. Finally, actuarial assumptions are estimates used in financial planning to account for those things like life expectancy or potential returns. While it sounds technical, understanding these assumptions helps you plan for a long, healthy financial future. Then there are these additional essential terms that I want to ensure you understand. Number 14, budgeting. Budgeting is simply creating a plan for your money. It helps you track income and expenses. It gives every dollar a job and ensures that your spending aligns with your financial goals and your core money values. Number 15, interest rates and compound interest. Interest rates affect everything from your savings to your debt. When you borrow, the interest rate is the cost of that loan. When you save, it's the growth rate of your money. Compound interest in particular is when the interest you earn also starts earning interest, accelerating your savings growth over time. Number 16 is credit score. Well, you've all heard this one. Your credit score is a number that reflects your credit worthiness or how reliable you are with borrowed money. It's crucial for things like getting loans, renting apartments, or even landing certain jobs. Higher scores lead to better interest rates and more financial flexibility. Number 17 is liquidity. Liquidity refers to how easily you can access your money without losing value. Cash is highly liquid, while real estate or retirement accounts are less so. Knowing the liquidity of your assets helps you make informed decisions about where to allocate funds for short and long-term needs. Number 18, inflation. Inflation is the gradual rise in prices over time, which means your money buys less in the future than it does today. Factoring inflation into your savings and investment strategies ensures that you maintain your purchasing power over time. Number 19, retirement accounts. Retirement accounts such as IRAs or 401ks are designed to help you save for life after work. They offer tax advantages, but each has specific rules on contributions, withdrawals, and age limits. So it's essential to understand how they fit into your financial plan. Number 20 is estate planning. Estate planning includes things like wills, trust, and beneficiary designations. It ensures your assets are passed on according to your wishes, reducing stress on loved ones and sometimes minimizing taxes. Number 21 is risk tolerance. Your risk tolerance is your comfort level with financial risk, especially in investing. It's shaped by your goals, time frame, and personality. Matching your investments with your risk tolerance helps you stay the course and avoid emotional decisions during market swings. Financial literacy is empowering. It turns financial chaos into calm, stress into strategy. Take one of these basics and start implementing it into your life this week. And to help you dive even deeper, I've put together a downloadable sheet of all the terms I've covered today, so you can keep it handy as you build your financial knowledge. If you're ready for more support, I'm here to guide you every step of the way on this journey to financial well-being. So please subscribe to Mindful Money Nuggets and the Unlocking Financial Wellbeing channel, where financial freedom starts with understanding. Bye for now. Take care.